Started. Yes, sir. Yes, sir. We are live, and it's a beautiful Monday. And for all of you guys out there, my name is Neil D'Souza, and you are live with us on Magic Monday as well. My co-hosts, we've got Jason Vaz in the house,
What up, what up, what up?
and as always, our man, the man in the mirror, Marlon. Yee man.
Marlon, man.
Yeah, and he's lost his voice today, but when he unmutes his mic, he'll be back with us. So
What's up? What's up, guys?
good to have you with us, man. Good to have you with us. All right, so guys, today we have got some great stuff coming up for you. Hope that you had a great weekend, and hope that you're excited and ready to listen up for the stuff that we're going to be talking about today. Now, before we get into our main topic, where we are going to be looking at, are we in a real estate bubble? Are we in a bubble? And we'll get to that in a moment. But before we do, I want to kick things off with some stuff that's in the news lately, and anybody jump in about this. So, Air Canada has, they were giving out $10 million in bonuses. Now, of course, we of course know that they were bailed out. They had to let go of a whole bunch of employees and put a whole bunch of people off of work, and they were giving out to their executives millions of dollars. Now, it was just put in the news today that those executives have decided to give that money back. Do I have anything from the gallery on that one?
Ah,
They should have gotten the money in the first place.
I was gonna say I think it's good that they're giving it back. Number one, I'm that's all I have to say on that. I'm just happy they're reopening flights. So
Nope. I'm completely against it. I'm completely defiant to anything you say right now. Like you said that. No, so sorry. I'm with you. I don't like that they got a bailout to begin with. Those who don't know, they just got agree something to the tune of like $1.5 billion. Um, this is a capitalistic. This is a for-profit company. In a time where many businesses are struggling, why do they get a free pass? We have a lot of social issues that our government should be putting ahead of bailing out an airline. There's other airlines that could take their place. We're never going to run out of airlines. We're never going to be in a place, oh, Air Canada goes away, all those people are going to lose jobs. No, they're just going to work for another airline. The executives will probably lose because anybody who's on the leadership board when a company goes belly up, they usually they're tainted meat. So that's what we say. So they should have got money. So now that they're trying to kind of smooth over, like, oh, all these bonuses we're going to give it back. Thanks, guys. You should have had it in the beginning. You know what I mean? It's like me stealing Neil's car and then giving it to Marlon, and it wasn't mine to give. And that's really what it comes down to.
Yeah. Here you go, Air Canada. We're going to give you millions of dollars. And Air Canada says thank you. And here we're gonna go give it to our executives. Money that should have gone to. I get it that they gave the money because you've got thousands of employees that are affected, and so they get a chance to be able to distribute that money to people in a way that allows the overall economy to keep money flowing into the while jobs were dropping, right? So. But that was an interesting one. I'm glad that they're paying it back now. Here's another interesting one because we talked about this on a previous show. Cryptocurrency prices have been in a free fall, and all because of what we predicted right here on Magic Monday.
I have a feeling Elon Musk must have been watching our podcast because shortly after we said crypto was doo-doo, he started saying it. So I don't know, man. Maybe we are influencers, the top 1%. So you guys tune into Magic Mondays.
Yeah. Elon said, "Whoa, Jason says that crypto is doo doo. I need to go out publicly and say this." And clearly he did, and the market reacted. So good job, Elon. Good job.
It's too funny.
Now, here's an interesting thing about the cryptocurrency. Now, that I think a lot of people don't know is that back in 2014, the Chinese government had already begun exploring, digital currency, and they actually to date now have approximately 200 million yuan in circulation in digital currency. So there's some digital currency wars yet to occur, and China's already at that game, right? They're looking for ways, I think, to get away from the U.S. dollar as the reserve currency of the world. So I think they're on this boat.
100%. I think it's
100%.
completely.
Yeah.
It's not a market to trade. I think it's 100% a geopolitical issue. Um, they just but I think because it's going to the moon. Really don't know where the moon is. Which moon? Like, aren't Saturn's moon? Neptune's moon?
Yeah. So, but what does that mean for if you've got countries that are doing that? What does that say with regards to all of these non-sponsored digital currencies, the bitcoins, the ethereums, the doggy coin, dodgy, however, yeah,
What
those
about
guys,
the Kumquat coin?
and all the rest, the poo poo coins.
So I mean, like
Yeah,
I think, like we predicted, right? You can't stop blockchain. You can't stop cryptocurrency. I think the ones that are going to survive are the ones that the government can control and tax, maybe, right? All the other ones, they're going to pretty much disappear. I think that's how it's all going to end, right? Whenever the government's coming in and kind of, taking control, you can play, but you can't play. Who's going to pay me or whatever it is, right? But it's hard to say, like we said, is it the best investment out there? Is it the safest investment? It's still kind of like the wild, wild west right now, right? So
Yeah.
I
Well,
think it's. I think
yeah. Go ahead,
sorry.
Jason.
Yeah, I was just going to just talk. I think where crypto's at is very similar to the late 90s, early 2000s, when the tech bubble was taking place. The big winners are still winners, but the vast majority of them were losers, and we don't even, like, people don't even remember these names anymore. Like, today's kids don't even know what Ask Jeeves is. Guys, us, we know what that is. But that was a big tech company back then. Like, that was a rival of Google. And you type that in, and like old memes pop up. That's what happens. So I think that's what's going to happen with a lot of these coins is the ones that don't have any substance that cannot um, really change anything in your life. And you can lie to yourself about the tech and how it's slightly different and this and that. The guys are building these things to make money off of the masses, and the masses are idiots and fucked. Once everything settles down, and just remember, dot-com bubble, in order for those companies to hit their peak again, it was from 2001 is when they crashed. It was like 2017 when they start to see those numbers again. A big stretch of time to get your money back. So all you guys shooting buy the dip, just remember, you haven't seen the dip yet.
Whoo! We haven't seen the dip yet. Elon, I hope you heard that. Hope you caught that right there. We'll be hearing that from Elon
Oh
soon.
yeah, he's gonna quote my tweet. Watch, he's gonna quote me, tweet it, send it, and everyone's gonna get upset.
Hot take. Okay, now right off of that, talking about the dot com bubble, let's look at our headline for today. Canadian home prices make the 2006 U.S. real estate bubble look like a deal. Now, wow, that's really saying something. I'm not even sure why they're comparing us to the States to get started, but let's just, before we get into who or any of that kind of stuff with regards to the article, let's just talk about it. Oh, there we go. We got it. Canadian home prices, real estate bubble. Are
They
we
got a nice
in a
picture
real
of Toronto. They know who they're pointing it at.
See, I just like that they've got the precious metals in the corner. But let's let's come back, Marlon. Why don't you kick us off? And do you think we're in a bubble? And does the finance industry, is it concerned that we're in a bubble?
I would say, the banks are obviously very concerned, but I don't think we're in a bubble. And I think we have many safeguards already in place. We've had the stress test for mortgages, quite in place for some time to get ready for these rising rates. I think one of the most interesting stats I read in that article, though, was that Canadian home prices are up 107% faster than rent in the last 5 years, right?
Yeah.
And I was like, whoa, that's crazy. But that's what you're seeing, right? I was talking to Jason, I guess, last week, and we're talking about people who get stuck on the rental treadmill, right?
Can I hold you up there for a second, Marlon? I want to go back to
Yeah.
something you just kind of cruised right over.
All right.
You said that you think the banks are concerned. Why do you think the banks are concerned?
Well, obviously it's all in terms of valuation, right? So what you're seeing today is that, obviously there's a lot of bidding wars going on. There's stuff like that. A lot of consumers are going out there taking advantage of the extremely cheap rates, which is leading to what they call exuberance, meaning everyone believes that, real estate's going to go up and up forever. And, so that can be a very risky for the banks, because when you go buy a property and then we appraise it for you, sometimes the value may not come in. Okay. On the flip side, if you own a home and you want to refinance it, all these people are trying to take all this money out of their homes to put into, to make it bets on, say, Bitcoin, cryptocurrency. In that sense, the banks are very concerned about refis. They've really clamped down on refinances. Mortgage volume is twice what it was last year. So there's a lot of stuff going on in the market, just a very hot market, but I don't think we're in a bubble.
So
I think we're just kind of fast forwarding.
So what I just heard from you was that the bank's concerns are that people are incurring too much debt. They don't want to use they're concerned about them using their homes to clear out that debt, and then of course the bank's holding all of it. And they're concerned about how these bidding wars are going, and that it might be affecting the actual prices of the actual valuations of these properties. Did I get you there?
Yes, you did. That's a nice summary.
Great. Okay. And Jason, what do you have to say about that?
I side with Marlon.
Are we in a bubble?
No, not at all. And I'll what is it? There's something that says the first thing the article says is makes 2006 bubble look like a deal. Well, today's prices make last year look like a deal. Last year's prices make the year before that look like a deal. That is the market we're in, and we've been in that for some time. Now, if we're in a same market of a 5% gain and always you're 5%, and now all of a sudden we're seeing like a 50 to 70% gain in 1 year, that's kind of bubble territory. But one of the things we really got to look at, and we're also comparing it to the U.S. real estate bubble, we got to look at what was fueling that. A couple things to take note of. One being fraud was very rampant. It was at its highest point before the bubble burst. Reason being is they had to fabricate demand for the supply. And here, that's not the case. We have low supply and the same demand as we always have. There's not been an increase in demand on Canadian real estate. The demand is the exact same, it's just the supply is low. That forward with low interest rates, yeah, that's going to push the prices up. The reality is that the minute we add more supply to the market and we not only bring up interest rates, we're going to see prices level off. That doesn't scream bubble. Now, the other thing we also got to consider too is that default rates in 2006, 7, leading up to 2008 were at an all-time high. There were a lot of products out there that allowed people that could not afford to pay their mortgage to go into forbearance. They could pull money on future value of their home to pay off the current debt. There was a lot of tools that don't exist for us. And in fact, our default rates are really low. Like, 2020, they gave us the ability to defer our mortgages. A lot of that came due at the end of 2020, out of which the vast majority of people that took it paid it up or they restructured their finances. And if there was a bubble to crash, it happened at the end of 2020. Now, however, I do think is happening is I want to show, and White can kind of show this out here right now, is the if we look 2000 moving on to like around that time, and we look at how much people were making, the average household income, if you can see, now it was around $6,000 as you can see on the graph, and that's Canadian. That's not a Toronto stat. I'm not being that Toronto boy that's just trying to say, hey, Toronto's just different. That's Canada for you, and we see a linear graph there. When we look at real prices in comparison to that, they're pretty well matched up. I do, however, think that we are in a state of inflation. I won't go as far as to say it's hyperinflation, but I think we're going to see inflation. I think we're going to go from the average 2 to 3%. I think we're going to start to see maybe 5 to 6. The cost of goods are just going to go up, and we're seeing that. Cost of lumber has tripled since last year. Cost of aluminum has gone up. Commodity corn prices have gone up. I went to go buy eggs the other day, and they costed me like $5.50. Eggs used to be like $2.75, $3. We don't notice it because it's a small amount, but when we compare it to the price of the production, it's gone up. It's gone up quite a bit. Now, you don't think wages are going to go up because of that? If they're really moving over, there's more money to share. So I feel that we're going to see a raise in wages, and I think it's all going to be right. But to call a bubble, I don't see it. I would say if the demand connection we started, fictitiously creating demand, that's one. I can put this phone on silent during the magic wonders. The amount of people that call me saying, "Hey, I want to buy a house." So the demand is there. No reason to think about it.
Yeah, so one of the things I got there that was really interesting that you pointed out was the difference between supply and demand, between the Canadian economy and the U.S. Economy, right? With regards to the housing market, and you're right, they really did have more supply than there was demand. And on top of that, we've seen the movies out there about The Big Short and everything with, these adjustable rate mortgages and all of the fraud and scams that were going on. Now, with regards to us being in a bubble here, I think one of the things that we just have to look at is that, first of all, everyone loves to forget about comparing the Canadian and U.S. economy. You can't even compare the Canadian real estate housing market because there's no such thing as the Canadian real estate housing market, right? Every province is different. I mean, you try to go look at prices when oil crashed last year out west, right? That's a completely different market in and of itself. Now, mind you, we've all watched as oil prices have gone back up, right? So I think that really they're doing a lot of, and you'll continue to see this in the news that there's going to be more and more talk about bubble just because the prices are going higher and higher. And I want to come back to something Marlon said. Marlon, you said something really interesting there about rent, the rent ratio, and what it costs to rent versus what it costs to buy. And it was in the article, and I loved this part is that it said, look at how much housing prices have gone up while rents have stayed low. And I thought that's because of a thing called rent control. For starters,
Yeah.
ask the
Yep.
landlords
Right.
if they haven't tried to raise rents, to stay with the market. Now, the good news is that if rents are lower than the cost of housing, then people can always come down, right? Like people can always rent. It's
Right.
when rent gets higher than the cost of owning that
Mhm.
people would rather go own. And so I
Yeah,
think
that makes
a
sense.
lot of what we're seeing right now is that because of the cost of borrowing, people are instead moving into houses, and we're just seeing a natural shift going back and forth.
Right, right. I mean, that makes total sense. I mean, in the market itself, I mean, obviously the condo market in downtown Toronto got hit pretty hard with COVID. But talking to realtor partners that I work with on a daily basis, they're saying the rents are significantly higher. Well, not significantly higher. They're noticeably recovered from the beginning or during COVID. But I do feel like the next upcycle here in the real estate market is probably going to be condos, larger condos, as detached homes are kind of on fire right now. People will start looking at larger condos again, and maybe I hear a lot of employers are actually calling employees back to work, even for a partial work week. So I think some people will have to reevaluate whether it's worth moving out to out of the city or still living in the city. Yeah.
Right. Well, it's interesting because there's a couple of interesting things that I want to talk about when we're discussing about this whole idea of being in a bubble. When you take all of these stats and you amalgamate them together, they're not taking into account that we have seen unprecedented growth throughout rural parts of the country, right? We can obviously say here in Ontario, rural Ontario has gone up astronomically.
Hmm.
It's gone up astronomically, but that's because what we've seen is that these prices were so low that everyone was going, "Oh my goodness, we can own these." People that had a lot of money were buying them up, scooping them up for
Yeah.
great deals to them, and
Hmm.
irrelevant, regardless of what that local economy would normally go for, because we know most of rural Ontario prices go up 5%, down 5%, and that's by and large. We don't see the same appreciation in other parts of the country that you're seeing in the Ottawa, in the Toronto areas, the major urban centers. You don't see that same type of, or you see a lot more appreciation as opposed to in the rural areas. And so trying to include those stats in, I think, also makes it look a lot more like we're in a bubble.
I want to just quickly chime in on that. A couple things. So you mentioned about the rents. Can everyone hear me fine, by the way? Let's just do a quick mic check. We're good? Okay.
It's a little bit better. Yeah.
In regards to the
Microphone
rents, one
check,
of the
one,
things
two. What
I'm
is
going to
this?
backtrack a bit before I jump into what Mary was saying. In regards to the rents, where the value of homes has gone up higher than the rent. Okay, let's look at micro markets. Let's look at places like Toronto. Okay, rents are controlled for the most part. If you got a building that's built before '92, when you rent it this year and your tenants stay there for 5 years, you're not bringing it up that much. It doesn't follow the free market. Now, new tenants coming in might be paying a premium. So, great example is if we looked at the last 6 months, there was quite a bit of inventory on rentals that was available. That brought the prices down. Now it's a little bit scarce, and now the prices have come back up. So I wouldn't use that as a true indicator, just because we got to take into consideration that some rentals are rent controlled, some are not.
Mm-hmm.
I think it should be a free market all over, personally. When you put a free market in there, you actually create more inventory in the rental market. Actually makes it better for tenants, but sometimes can see past 2 weeks ahead, and that's why we've got the rules we do. Um, yeah, it's
Can
always
I
what.
quickly say something about that, Jason?
Yeah, 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 come on.
So what I'd love to mention about that is that in 2008, I remember when the U.S. real estate market was crashing, and
Yeah,
we were definitely seeing the effects of it. And I remember that at that time, owners of multi-unit properties, multi-family dwellings, these buildings, they were selling them off at that point in time. And what was interesting to me, 2007, 2008, I was seeing them sell it off, and it was, they just didn't want the volatility. A lot of these owners had been in there for 20, 30 years, and they were like, you know what? uh, you see as tenants are buying houses and they're leaving, and you get in vacancies, and because they haven't seen any real vacancies, we always put a stat in there. If you're an income property owner, you know what I'm talking about. We just put in a stat just so that the bank feels good about the stat, but we never want any of our units vacant. So you put that in there, but then all of a sudden in that 2007 2008 started seeing more vacancies, and landlords said, all right, you know what, I've owned the property long enough, and they started selling off. But then you couldn't get properties again readily for the next number of years. And I'm seeing that right now you can get income properties, multifamily dwellings, while you can't negotiate anything on a residential home. We're negotiating on multi-unit properties and getting great deals. So, you know that I just think that's really interesting about what you were saying about tenants coming
Yeah.
in and going out. Great. Okay. Was there something else you were going to say there, Jason?
No. I just wanted to chime in on that little piece there. That was
Okay.
about it.
Okay. Great. So, with regards to, are we in a bubble? I think that I want to give a couple of final thoughts, and then I'll get you guys to chime in here. I think when we look at, are we in a bubble, most people are looking at it and they're asking the question, well, when will it burst? And will I lose money, or can I get a better deal? That's what there's a lot of people. If I hold on to my money, will I get a better deal when the bubble bursts? Whereas most people, if they've already bought the property, same thing in 2008. If you didn't have to sell, you were just fine. The market came back up, you were good to go, unless you had to sell in that market. And so I think the only people that really need to worry about this idea of bubble territory are the flippers, the ones who need the appreciation to keep going up. I'm talking about the speculators, not the people who know what they're doing, getting a good price on it, know what they can get for that property, and are able to build it in. And because I don't see any real deflationary bubble bursting, like people talk about, because the government has made it very clear that they do not want to see it. They're going to keep printing money if need be, and continue to give us stimulus checks to make sure that the economy stays busy, because they want to make sure that jobs are out there. Final thoughts on that, gentlemen?
I guess that's a good way to lead in. I mean, I don't think we're in a bubble, but I think all this government stimulation will have a long-term side effect eventually, and usually that side effect is higher rates. And I think that's what's going to bring down the market eventually when we get there. But I don't think it's going to burst. Rates. The Canadian bankers and the Canadian government's pretty open about where rates are going in the future. They've already told us fixed rates are going to be higher next year. They've already told us variable rates will be higher, so you can prepare for it, right? But I do feel the higher rates is what's going to adjust the market downwards. That's my final thought.
Yeah.
Love it. Love it. Jason?
I 100% say no bubble. I don't think the prices will even come down. Really and truly, I think the worst case scenario is that they stay stagnant for maybe a year, but I don't see them coming down. And where people, speaking to the person that's holding on to cash, thinking that they're going to take advantage of it, I think the $50,000 to $100,000 that they're holding on to will have less purchasing power when rates go up than it does right now. And I think it's a pretty foolish way to navigate your investment strategy. We saw this in 2011. I remember people saying, "Oh, I'm going to wait till the market went down." And then in 2013, that fall in Toronto, we saw a bit of a stagnant market. Not everything was selling so quickly. That was the opportunity to buy. A lot of those guys waited on the sideline thinking, "Oh, this isn't the bottom yet." And then by 2014, bang, it was back up again, and we haven't seen it cool down ever since. Like even after 2017, when we actually saw the market correction, people didn't make a move. Why? Because they were expecting, when the average price was 7, they were expecting to go down to 4, and they need to adjust their expectations. I think what we will see, especially in Toronto, we won't see as many crazy multiple offers moving into the next half of the year. But I think the prices, they're going to hold on to them, because sellers are only going to sell for low if they absolutely have to. And if default rates are at a low, the only thing you're hoping for is if someone's getting divorced. You're hoping that they'll sell it off to you because they're getting divorced. And it's not enough divorces to shake the market. There just isn't. So yeah, that's my 2 cents. No, there is none. If you're not holding on to hard assets, I think your money's going to dry up. Just think about it. You got a puddle on a hot day. Every second that passes by, a little bit more evaporates. That's your down payment. Might as well stick it into the house.
So basically, Jason, you're saying that if you're a homeowner in Canada, your asset. You're good to go. You got your house. You don't need to really worry about it. You're going to be able to enjoy that. Whatever happens with the dollar, the value of your home for the most part is going to be good, is what you're saying.
Absolutely, absolutely.
Now, what does that say for buyers?
It's a tough one. It's a hard gig for people who are looking to buy right now. I'd say set your expectations lower. A lot of them think, and I've been dealing with a couple of people that have gone to like 800 to a million. They think that can get them a mansion, and they need to understand, no, that's the entry point now. And you can bitch and complain about it for a couple of weeks, but that's valuable time you're wasting when you could have just executed a purchase, and then you can be on the gaining side. Because it's a wonderful feeling when you bought a house, you move into it in 90 days, and it's worth more on move-in date than it was on the day you purchased it. Yeah. You only get that if you buy. If you keep waiting, eventually the market outpaces you.
Yeah. Well, this article talked about going back to 2005, and what's interesting is that the dollar is devalued by 30% since. That's just the recorded stats, not necessarily the real stats, by 30%. And so, just looking at that in inflation, you've got to realize that you're better off to own, and what do they say? Time in the market rather than trying to time the market.
Correct.
Yeah. Marlon, you right there.
Yeah, that's right. Ladies and gentlemen, thank you so much for tuning in to another week, Magic Mondays. We love you guys, and we'll see you next week.